The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the November 29th? I think so. Yeah, the November 29th. I gotta have that figured out before we start that show. In any event, welcome to the November 29th, terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that, it's to always remember that life is a happening for us, not to us. That's right. When you and I make that one little happening to us, by for us, that little 2x4 shift out there, that means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, we've got you covered. Let those fingers do the walking. Yeah, the yellow pages. Except in today's day and age, it's called email. You can send me an email, steve@tfnn.com. Just inside the subject heading, please put radio show question. And in the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow off 52 points, 25,314 is the print. S&P down 5, NASDAQ off 22, NASDAQ 100. Russell's off 1.5 points, semis down 4, so it's mean and red. Wouldn't call it mean. I would call it red across the board until we get to that spot volatility index. Now, with the S&P being down by 5 points, okay, you would expect the spot volatility index to be up, but by 4%? By 77 cents? No, I don't think so. So something isn't right in paradise. Paradiso. You've got the gold contract up $1, silver's down 6 pennies, light sweet crude up $1.55. Leading the charge to the upside, dollar-wise, $14 is Tech Data Corp. I don't know if they're still headquartered over in the Clearwater, St. Pete area. I go back a long way with Tech Data, the founder, Ed. God, that takes me back to about 1983 in any event. Booking Holdings, that's up 10 buckaroonies. Mercado Libre up 9. Stamps.com up 7. Molina Healthcare up 6. To the downside, it is NetEase up $10, 9.30 off 4%. Quest Diagnostics down 8. Align Technologies up 3. Chipotle down $7. That's a little bit over 1% out there. So there's plenty for us to look at. Of course, I want to look at what you want me to look at. I don't have any requests in. How about that? Let's go take a look at the markets. Let's just kind of do the run through as to what the markets are doing, what to be looking for, why, when, and so forth. So today, if we take a look at what do we have going on today, when you and I were together yesterday, we saw a huge breakout to the upside that took place. It began at 12 o'clock. So when we came on at 1 o'clock, the big move to the upside was done. Took place between 12 and 12:10 in the afternoon. And that's this big wide-ranging bar with volume. We're looking, by the way, at just a 10-minute chart. So we're going to go ahead and steal one of Obi-Wan Kenobi's tools because he loves that 10-minute chart. He sleeps with that 10-minute chart. And that 10-minute chart provides him with a ton of information. Well, if we take a look at that information, we can see between 12 and 12:10, you had 19,634 Dow equity futures contracts trade hands. Big volume. What did price do today? Now, price pulled back, and it pulled back because it generated one of those Rhodes momentum indicator tops. Don't believe me? Well, here it is for the Dow. Only not on a 10-minute basis. It may have on a 10-minute basis. I was looking at a 10-minute basis, but it most certainly did on an hourly. It also did on a 30-minute time frame chart. And like subscribers and I looked at this morning, we said, hey, no problem. No level of support has been broken. That is still the case as of 1:11 in the afternoon as we look at the hourly chart. In fact, price has only pulled back to the center of its box at 25,213, where both buyers and sellers are most comfortable with price on this time frame out here. But it has not broken above Stevie's green line out there. That's currently priced at 25,389. So we're just consolidating. But why did price also stop at that level? Yes, it was the point of control on a 60-minute time frame, but on that 10-minute time frame, that's where all the volume was. So price came back, tested it, rejected it, moved all the way back up to a top of a 10-minute profile that was in force or still is in force at 25,328. If we take a look at the ES Mini, let's go look at that. It, in essence, did the exact same thing. You'll see that again. We're looking at that Tom O'Brien 10-minute equity futures contract. Here's the ES. Here's the one that he's focused on. And I'm certain if he was looking at this, he was going to go ahead and fire away to the long side as price came back to that wide-ranging high-volume bar, which is clearly support out here. So the question is, where is price headed to? So let's get off of the 10-minute chart. Oops, I didn't mean to do that necessarily, but let's get off of the 10-minute chart and try to figure out what needs to occur today for the ES Mini to continue its breakout. And the answer is, it's no different than yesterday. The number you wrote down on your pad of paper yesterday, or wherever you wrote it, a little yellow sticky note, you put it right smack dab right there on your screen, and you said, Steve-O says, because the TAS market profiles say that the ES Mini needs to close above 2748.75 before Steve-O can put on his Santa rally hat. Why is that? Because that is the top of a daily profile. That is a resistance level. If price closes over that area, the old sphincter muscle of the shorts is going to continue to get much tighter out there. Now, whether or not yesterday was a short covering rally, may have been some, may have not been some, the market will move higher if it can close above resistance. It is just that simple. Now, if we take a look at the NASDAQ futures, the NQ right next to it, its next door neighbor on Stevie's chart out there, you'll see that number continues to be 6934.50. That's the number to be looking at. Inside the Dow, he or she, however you want to refer to it, has already broken above its top of its box out there, and so it's ready to run higher. But it does not want to do it until it gets responses to its RSVPs out there, and it hasn't. The fly in the financial ointment, I haven't figured this out just yet, but we will figure it out, is what is that spot volatility index doing? Yes, I know it's trading at 1930. But why is the December contract at 1865, the January contract at 19, the February contract at 1905, the March at 1916, the April at 1905, the May, you kind of get the picture here, in 1905, the June at 1912, the July at 1930, the August at 1905. In other words, the spot volatility index continues to be in that huge backwardation area where it's traded above all of its free futures contracts. It's not normal. In other words, it's just some type of short-term event that the market is worried about. And not until we see that spot volatility index close below, stay below, it did by 2 pennies yesterday, its 50-day exponential moving average. We got buyers and sellers all over the place. Steve Rhodes with TFNN. We'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Let's go out to Philadelphia and speak with John about the S&P 500. John, thanks for calling. Thanks for holding. How are you doing on Terrific Thursday?
Steve, I'm doing excellent. Thanks for taking the call.
My pleasure.
I ask if there's anything in your work on the S&P or the E-mini futures that you see in your work that could suggest between now and Christmas the S&P decline from here and make lower lows than last week. I guess that was 2630. And continue with a pattern that is similar to what happened in the year 2000, one Saros cycle ago, 18 years, 11 days.
Sure. Well, let's look at the bearish side. What needs to happen in order for that to occur? And let's just take a look at the ES Mini, only because, John, it's a little bit easier for me with regard to signals and what we would look for out here. And one of the things that we can see, so we know a couple of things. One, like I was discussing during the break and prior to the break, how the spot volatility index is trading above all of its futures contracts out there, and that is, or maybe I didn't say that, but we looked at that, folks, and it is trading above its 50-day exponential moving average. When that occurs, there can be the surprises typically occur to the downside out there. So yesterday, even with that fabulous move that we had, even with that wide-ranging bar, and we know that typically markets don't end on wide-ranging bars out there, even with that, the spot volatility index, when it closed yesterday, was 2 pennies below the 50-day exponential moving average. 2 pennies doesn't cut it for me with regard to conviction. And we've seen that it's, in essence, bounced off that line. So as long as that is in place out here, the risk to the downside, in my opinion, is present. The second factor that we have is just a simple trend line that everybody at home can draw in on their ES mini chart, which uses the high of October 3rd, the high of November the 8th, and you can see we're still below that level. So it has not broken above there in order to suggest that price is ready to move back to the November 7th and or October 17th level. So that's the first thing that I see out here. Continuing on with the ES Mini is simply the mere fact that price has been unable to close above the top of its daily profile. Now, if we take a look at the ES Mini out here, it's really helpful for it to be able to take out a level of resistance. So you've got trend line resistance that you and I looked at. We now have this horizontal level at 2748.75. If price closes above that and the spot volatility index closes back below the 50-day, then we go run higher. Now, that higher could just simply be up into the 2800 level. And if it closes above 2843, then it would say this Christmas rally is really on its way up to the highs. So at this stage here, resistance has held. And as long as resistance holds, that possibility of maybe making a lower low, retracing, all of those things are still in effect out here. However,
I appreciate that, Steve. Is there anything that you can point to either on your 2-hour, 60-minute, or 30-minute charts that show where support very near term is, and if broken might suggest lower prices?
Yeah, the 60-minute chart, I think, is the better one to do that. And that is the current profile here. The number you're looking for would be 2720. 2720 is the bottom of its bullish structured box at the moment. 2726 is the center line. That's where price found support on a closing based on a 60-minute chart today. So that's what I would be looking at as an indication that there would be a further pullback. Not necessarily that means, okay, you know, we're automatically headed down, but that would be a level of support that I would want to see broken to say, okay, there is a further pullback, a further retracement. On the 5-hour chart, which I also know you like to take a look at, John, is at about 4 o'clock this morning, it gave you that Tom DeMark setup 9 count. So, you know, if the highs get taken out, you know this better than anyone. It tells you that, you know, a pattern where there should have been some type of temporary high really wasn't much of a temporary high, and you have momentum to the upside. The level to be watching on the 5-hour time frame, it's different than the 1 hour, would be Stevie's green line, 2710.55. So I think that you would be onto something, that a deeper retracement would be in place if both those levels are broken. Obviously, if 2720 is broken, the question should be, well, where's the next level of support? Right now, it's 2710. And that's what I would see as the potential for downside in the marketplace. The only other thing, John, that I would...
Steve, that's very thorough. I appreciate all that. Just in closing, I have to give you another pat on the shoulder. That new perigee pivot that occurred Monday morning, like 7 a.m., down at 2655, was tested on Monday and then again on Tuesday. And when that held, that certainly gave us a clue as to what was to come yesterday. So great work on all that stuff. I thank you for your help.
Well, I appreciate it. Hey, let me ask you a question if I can, because you have started applying the apogee and perigee pivot to gold. So tell the audience and tell me, please, how is that working? What have you found in the couple of months that you have been tracking that?
Steve, I'm loath to give any definitive conclusions because you and I both know the gold market has been range-bound since Labor Day. So we're dealing with a sideways market. And when the market does start to trend either higher or lower, then we can, you know, comment more meaningfully on that question. What I can say is the perigee pivot for the Dees gold contract is right here at 1225, and interestingly enough, that's exactly where price is right at this moment. So what I will say just about apogee and perigee, you know, just like on the S&P futures or the NASDAQ futures, when a market is moving up from that pivot, it's not a good idea to be short.
Sure.
And the inverse is true. So I found it helpful as a guidepost, but until this market starts to trend, we won't have any real clear evidence how valuable that tool actually is for gold and silver.
Right. Okay, cool. Hey, thanks for that update. I appreciate it. And now everybody knows that 1225 is a pivot point as well to be taken a look at. And folks, if you're watching us on Tiger TV as well, as John has said, gold has been range bound. Here is another version of the range that you can see that it's trading within. If you're watching us on Tiger TV, all of the red diagonal trend line resistance that it's sitting at out there. So both sideways as well as diagonally, you can see where gold is trading within. So, John, thanks so much for calling, and I'll look forward to your next call.
Thanks for your help. Bye now.
You bet. So we got the Dow down about 60 points, S&P off 5, NASDAQ 100 down 22 points. We'll be back in just a few minutes. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of the Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find the Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So Ruby in the Tiger's Den wants to look at bacon. So we're going to look at the Baconator. We're going to look at lean hogs, a December contract. And, Ruby, I don't know which side of the trade you're looking at here. Here's what I can share with you in looking at the 60, the 240, the daily, and the weekly set of profiles out here. It appears to me that the 59.10 level, which is the 4-hour time frame, is a real resistance area. Now, we can see and I'll just simply explode this chart up here. And what we can see is that price has been able to spike above it, but by the close of that 4-hour session, what we can see is that price closes below that area. Now, that happened at 9:30. That would be a 4-hour chart, so that's 9:30, 10:30, 11, 12, through 1:30 in the afternoon. That was on the November 23rd level, was tested again on the 26th. For that next 4 hours and failed. It was tested again. This seems to be a 9:30 kind of have your coffee and hogs. It must be afraid of turning in bacon out here. So I would be watching a close on a 4-hour time frame about 59.10 if you're looking for, hey, is price going to break out to a new level? Now you've got the top of that profile as well, 61.42. I don't have any signals that this time frame is forming a new profile out here. So right now it's good and it's active. On the daily time frame, so you can kind of piece it together, that level is 58.94, and as you know, we're trading just slightly underneath that. Does that mean this is bearish? No, not necessarily. I think what it means is that right now it just kind of, you know where resistance is at out here. I mean, like you on a daily chart, you know, I see a series of higher lows. And I see a series of higher highs out there. So that itself would say, yeah, you should be long and just understand where it is that the support or resistance is at. On a daily time frame, what you would prefer not to see is a close below the bottom of that box at 56.46 out there. So I hope that helps you out with regard to the Baconator out there. We've got some other questions that have come in. One here from Kay. Kay says, hi, Steve. Hi, Kay. What do you think of McDonald's MCD pullback or just more? What do you think of McDonald's? Is this a pullback or just more up? Okay, I think that's the question out here, but let's try to go answer that. So in the case of McDonald's, currently trading at 188.98, a gap to the upside. So remember, gaps are our friends out here. It's taken out a swing point, a prior swing point, as well as the top of its daily profile, so 187.42. And so, Kay, I would share with you that that's the first level of support. Now, in the case of McDonald's on a daily time frame, what you and I can see, and I'll just make it more evident for everybody watching on Tiger TV by turning price up, what makes yesterday's move and today's move more bullish is the mere fact that you had a bearish structured profile. By a bearish structured profile, what I'm referring to, if we just simply go ahead and we just use a yellow rectangle, or a yellow, it's not a box, a yellow rectangle at this stage here. This is what we're looking at, folks, with inside the yellow. You'll see the center of that box, which is priced at 184.74 versus the top, 187.42. You see, the top, we know that's where the snipers are. We know there's sellers. We don't know how many. We just know there's sellers. That becomes resistance. Just simply, that's how you would utilize these profiles. What we also know is that within its box, within its range, and the range would be the bottom of the box, that'd be 175.34. We know that is support. We know that's where the buyers are lined up. But what we don't know, what we do know when we take a look at the chart, is where is it both buyers and sellers believe that inside this daily time frame, because that's what we're looking at, where McDonald's is fairly priced at. And that level is 184.74. So you got a whole group of buyers and sellers up there at 184.74. You have nothing but sellers at 187.42, nothing but buyers at 175.34. I'm kind of using that metaphorically because the buyers and sellers can get overrun by a stampede of lean hogs, as an example out here. And we are talking about McDonald's, but when you close above a bearish structured profile, that's bullish. It's at least short-term bullish. So as long as price is able to stay above that, doesn't matter whether the top of that box gets tested or not, as long as price can stay above that, well, that's short-term bullish. Okay, yes, it's pulled back today. right? It opened, in essence, at about its highs. It's pulled back, but that pullback doesn't mean a whole heck of a lot just yet. So if you were in this now, volume-wise, today you're at 2.6 million shares, taking out November 19th that had 3.7 million shares. It looks like at the end of the trading session, volume's going to be similar or maybe a bit more than the trading volume on November 19th. That's pretty decent move. Now, that's what the daily time frame chart communicates to you and I. What we can also see, though, is what McDonald's is doing. It's almost the end of the week. Is it also had, well, let's prove that. It also had the opposite. It had a bullish structured weekly profile. By the way, that profile formed this week. Yeah. And so it's almost Friday. And a bullish structured profile says, okay, real good support between 164 and 167 out here. And what do we know? Bullish structure. The bulls say I can push price up to the top of the box, 188.90. Where's McDonald's trading as we speak right now? That's the question. It's trading at 189. Okay, 189. Top of that box, 188.90. So what you want to watch is, I'm sorry, it's trading at 188, yeah, 97 out here. So you'll kind of want to watch this tomorrow. So price has another level of resistance, a weekly and a daily out here. And if it can close above as it comes into tomorrow, 188.90, well, now you've got two levels of resistance that have been taken care of. There's nothing on the monthly chart for you and I to look at. It's okay. I hope that helps you out with regard to what does Stevie think McDonald's is doing out there. So, hey, happy meals for everyone. All right, let's go take a look at our next question. This one's coming from JJ. And James says, hey, Steve. Hey, James. Apple has had lots of bad news and downgrades. Do you think short to medium term it would be a buy here? Thanks. So great question. Is Apple a buy? And with regard to answering that question, maybe, maybe not. Here's what we know about Apple. Here's what you want to watch today. So we know that Apple formed a Tom DeMark setup 9 count on November 23rd. Typically, the day of, the day before, the day after would be a turning point. Well, the day after, a little bit lower low, formed a hammer candle. Hammer candle says you're hammering out a bottom. That was a bullish sign because we got A to B equals CDs all over the place. So that was a bullish sign out here. Yesterday, you had another bullish signal, two of them. You had a gap to the upside, gaps are your friends, and you had a close above Stevie's red line. Now, the red line is referring to where is the price oscillator, above zero or below zero? It's below zero. You close above it. Today, price moves higher, and right now, price is coming back and testing that red line area. The red line number, I can't do it that way. I've got to do it a different way. Let's see, can I do it before the break? That's the question. It's amazing what I can do before a break. Stevie's red line is 178.80. You want to see a close above that before Stevie would give you the all clear. Or at least that's the first signal. We'll come back. We'll finish taking a look at Apple. Be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So we're trying to answer for James, question about Apple. Should he be a buyer here? And what we looked at is, so we know that it's trying to form a bottom. And if you were going to take a trade in Apple, you would want to stop out of that if you saw a low below the low, that hammer candle out there. Because it would say the rhyme is, if you're long, you're wrong. The low is 170.26. So there's signs of a bottom. We know there's resistance. You got Stevie's red line. We took a look at the number. Even if you clear that, you still have overhead resistance. That's at least either the bottom of the box, 185.09, or the top of the box, 192.50. If you're going to ask me, which I think you just did, do I see any intermediate term signals of a bottom inside of Apple? We look at the weekly time frame, and the answer is no, I don't. But we could look at the monthly time frame chart. And if you and I were going to take a look at the monthly chart, and we're going to do this a while back, well, I guess that would have to be at the beginning of November, before price was trading, you would have said to me, if Apple pulls back, it probably is going to try to find support at the bottom of its profile. That would be a beautiful buy if you were looking to get into Apple. If you had a real belief, and you would have said, please, pull back to 167.91, the bottom of the profile. Well, it did not make it all the way down there. Instead, where it made it to is it made it to 178. No, where did it make it to? 170.26 out there. So close, no cigar. James, it looks like it's trying to form a bottom. This is about the best advice that I can give you is you've got to make the reward risk decision here. So I do hope that assists you with that trading decision out here. We've got a question here. This comes in from no name, looks like from a cell phone number, so that works. This is coming in from T-Mobile. Hey, how about that? So Mr. or Mrs. T-Mobile wants to get into that UGAZ. That would be the long, I believe that's long, natural gas contract out there. And if we take a look at it, which we won't do necessarily, but we're going to look at it anyways. On the daily time frame, we're going to look at its profiles. The reason why I say that is because you really have to take a look at the underlying instrument. Now, what I don't know about the natural gas contracts, maybe somebody in the den does, or Mr. T or Mrs. T-Mobile. Hey, we can call you Mr. T. I like that. What I don't know is inside of UGAZ, which I assume is based on what's inside UNG, if it's just one futures contract. Because it may be two futures contracts, I don't know. And then, of course, you'd want to know what the weighting is inside there. But these profiles would say if you're looking to get in on UGAZ, pull back to 117.61 would be nice. I'm not saying it's going to pull back to 117.61. I'm saying that would be nice. That's the bottom of a profile. But we wouldn't stop there. What you would do is you would make sure that you knew what the underlying instrument was. Now, maybe what it is, would it be, let's come up here, is take a look at the current active contract for natural gas. As soon as we can find that on my screen out here, that would be January. Again, I don't know if it is. And so you're looking to get in. You're looking in it to win it. And at this stage here, you know, assuming that you want to buy a retracement, you'd have to say that today's low would possibly be it, but then you'd be getting back inside a bearish market profile, not on new gas, on the natural gas contract out here. Prices above a, and we're looking at the 4-hour time frame, is above a bearish structured box, so it's bullish. It's bullish on the 60-minute. It's bullish on the 240. It's bullish on the daily. It's bullish on the weekly. It's just simply bullish out here. So looking to get in, I'm just trying to study these charts, you know, in a couple of moments worth of time to say, you know, what is it that we see that is common? We see on a 60-minute basis, prices kind of pulled back into the center of a bullish structured box. This is back on November 27th. You form another profile here for just a few hours. Then you form a new one. This was bearish structure, pulls back to the center of the box. So here's what I would be looking at on a 60-minute basis. If you see natural gas, during the hours that you are trading, you can trade UGAZ. You'd be looking for a pullback to maybe 4.47 to 4.53 out there on the January contract. But Mr. T, please go check to see what is inside UGAZ out there, because I have a sneaky suspicion that it's more than just the January futures contract. Okie dokie. No other questions, and we've got about 3 minutes to go inside of this segment. I don't see anything inside of the Tiger's Den out here, so it looks like I've gotten to just about everything. So now we've got to just let's kind of take a scan of what's going on in the market. What is it that I haven't shared with you that I can share with you that would assist you? It's a great question. I don't have the answer to that. So instead, just for the heck of it, let's go take a look at tech data, just for old time's sake out there. Now, I used to be in the computer industry. This is back in 1983, and that is how I became friends with the gentleman who started Tech Data, and of course it was which they were our distributor. They weren't the largest distributor, but they were a nice distributor and a local distributor. The other distributors, well, were primarily in California out there. And so this is a 10-minute chart. I didn't really mean to do that. TECD is the ticker symbol, but I'd like to see how TECD, Tech Data, TECD, is actually performing. Well, it's a nice move it's having today. It's a nice week that it's having. And let me just see what the long-term chart here. And really not doing too bad. So I don't know who runs it, who owns it anymore. I know that Ed's son had taken over many, many years ago. Like, this is over 35 years. This is 1983, and we're in 2018. 35 years ago, right? Yeah. Tech Data looks to me like, when I take a look at the monthly time frame chart, may want to make a run to the 105.29 level. Let's see what the weekly and the daily have to say about it. Well, weekly, that looks pretty nice out here. Nice big wide-ranging bar. Whoa, that can't be right. I must have a data issue from March 16, 2015. It says it went from 280 down to 67. So that's a bad tick. So I can't really use that. What else can we say about Tech Data? What can I say? Not much. So hopefully they're doing well. I wish them well. Of course, I don't even know what they do anymore. All right, so that was kind of a waste of 2 minutes. My apology for that. But just looking for what else can I look at for each of you out there that would be helpful. Light sweet crude. Light sweet crude. Thanks for asking. That makes a lot of sense. We should go take a look at light sweet crude. Let's go see what it is doing out here. It's up $1.73. Trade out at 52.01. What does it mean? Jelly bean. Well, at this stage here, what it appears to mean is price is back inside that daily profile. It looks like it is a bullish candle at this stage. It'll be dependent upon the close, and says that light sweet crude could make a run to 55.74, 58.16. That's the center and the top of its daily profile out there. So it does look like there could be some counter trend rally. What does that say about the XLE? What does that say about the XLE? XLE looks like it wants to make a run for 69.26. That's what Steve-O says, 69.26 to 70.44. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So just turns out that Brent in Martinez, California was writing in asking about light sweet crude. He wanted to really know about today's candle session. And so, Brent, right now it's not a bullish reversal candle. It could turn into a bull sash. In order to do that, it needs to close above yesterday's open. And yesterday's open is 52.09. You're trading at 51.95. Ideally, what you would like to see is for price to at least shoot up above yesterday's high. That would be 50.06. The reason is because then you would have a key reversal session out there. So that's what I see when I take a look at light sweet crude. What we need, or light sweet crude also needs out here, Well, no, that's all that it needs to then at least take a run for whether it's 55.74 or 58.16 as we speak right now, the top of the daily profile or the center of that box. The last question for the show looks like it's going to be coming from Tim. Tim writes in, wants to take a look at XEC, and his question is, where's a good entry point? So I think you want to wait right now. That is the Cimarix Energy company out here. The reason why I say I think you want to wait is because it's testing resistance. Now, maybe it's going to take it out, 84.59. And if it does, then we got to come back and take a look at entry points. Where's a good entry point? 79.02. That's the bottom of its bullish structured box out there. 80.42 would be another possibility. It may break out, and you may have to chase this, but right now it's right at resistance, so there's no reason for you to go ahead and take a position in it. The other entry would be about 82.57, the bottom of its bullish structured weekly profile out there. So, Tim, I hope that helps you out. Hope I've helped everybody out there. And thanks so much for being here. Stay tuned, if you would, please, because your favorite polar bear, David White, he's up next. After David, you've got Tom O'Brien from 3 to 5. I'll be back with you on Fantastic Friday. Have a terrific Thursday. Take care, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s and the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.